welcomed everyone. I think Juma, everyone has been introduced. Your team has been introduced. Please proceed.
Okay, thank you very much, and welcome once again to the second half of the year H1 2024 call. And I've already introduced my team. Now, in terms of what we aim to cover for today, we will look into the operating environment and then cover NMB overview. Being cognizant that some of investors are probably the first call. Then we will cover our strategy, followed by financial performance. And then we will cover digital and technology transformation journey that we have traveled and the direction we are taking as an organization. But also, most importantly, we will also look into the ESG highlights in terms of our sustainability agenda. And then we have included sort of appendix just to appreciate in terms of our historical performance for the last 10 years. Now, in terms of how we have structured this presentation, I would allow Innocent to take us through the macroeconomic environment, operating environment, and then I'll kick off the overview of the bank and strategy performance. And then Ino will also walk us through our sustainability agenda. So Ino, over to you.
Thank you so much, CFO. Professor, very good afternoon to you and the rest of the team that has been able to join us today. We thank you so much. So from a macro environment point of view, we are very happy and bullish that Tanzania continues to be a very exciting market. If we look at all the macro fundamentals, they point towards a very favorable macro direction, whereby the value of exports, as highlighted in this slide, we can see that it continues to grow exponentially, while the value of imports compared to exports, it's trending lower. So this has resulted in a narrowing the current account deficit. But more importantly, if we look at other macro fundamentals such as inflation, we see that the inflationary pressure is continuing to be moderated given the prudential macroeconomic reforms and the positive trajectory that we have, especially in the agri-basket. And the inflationary rate currently is trending at around 3.1, well below the regulatory threshold of 5% that has been set by the Bank of Tanzania. And more importantly, if we look at the foreign direct investment, Tanzania continues to be a very exciting market for foreign investors as well as other investors. We see the value of FDI continues to rise year on year, and this just points further to the overall improvement in terms of the business operating environment here in Tanzania. The banking sector continues to trend very well. If you look at the value of deposits as well as the trajectory in terms of credit to the private sector, we see that deposits continue to grow on year-on-year basis, and currently we are standing at around 17% year-on-year, as well as the credit rate continues to grow very well also, indicating further appetite from both domestic level as well as corporate level. And this cumulatively has resulted to the value of gross domestic product for the country to be growing on year-on-year basis, and the projections, they continue to highlight that we are going to go back to the levels that we were at pre-COVID levels, more than at around 7%, currently projected at 6%. So the banking sector overview, owing to the good operating environment and exciting macro trajectories, the banking sector as a residual claimant, we have continued to benefit greatly. And if you look at the total assets for the sector, we closed the half one at around 56 trillion. This is the highest level we have ever reached as a country. But more importantly, if you look at the quality of the loan portfolio, continues to also improving markedly, just further highlighting that the overall business environment is improving markedly post-COVID, and as well as the geopolitical tensions that have continued to grapple the world at large. So if we look at the loans, they are also increasing, the deposits are increasing, but more importantly, the profitability of the banking sector continues to grow year on year. So in a nutshell, Professor, what I would just like to highlight to all the listeners is that the banking sector in Tanzania, it remains solid, sound, and profitable, with all the key fundamentals pointing towards a very favorable direction. Thank you so much. I'll pass on the mic to the CFO to take us through.
Okay, thank you very much, Innocent. And I'll take you through in terms of NMB overview. Quickly run through in terms of the progress we have made as far as maintaining our market leadership position, specifically in terms of the growth we have seen on our balance sheet touching 13 trillion as at end of June. But also we have seen customer deposits also growing, of course, at a rate of 9%. And we have also scaled up market capitalization, if you look at our market, but also even if you compare regionally, we'll cover a slide where you'll see and appreciate the growth that we have recorded in that space. I think the labor diversity, people diversity continues to be very relatively strong in terms of 48.2%. But again, I think in this slide, we have also included some of the recognitions that we achieved during the first half of the year. And of course, if you look at it again, the branch network has remained stable, of course, with the marginal increase currently at around 234 branches. Wakala footprint has increased year on year. We are now at around 39, of course, almost touching 40,000. And the number of ATMs has remained stable. I think this is a reflection of what we have been doing as far as channel optimization strategy is concerned. So we have not grown so much on the number of ATMs, but we are pretty much growing steadily on the Wakala network. As such, just the next slide is about our market capitalization story and the highest record share price we recorded in July, around 5,400. This is a historical price that has positioned NMB to be the largest listed bank in East Africa, among the top largest listed banks in East Africa. But again, if you look at it from the Tanzania market as the leading financial institution as far as market capitalization is concerned. This slide also indicates a very strong and stable shareholding structure, which has relatively remained the same over the period. And the next slide, I just want to quickly run you through. And of course, some of you are aware that we have our MTP 5 years, which is coming to an end. 2020 remained the same. Our key focus areas have remained the same, still relevant. And so under delivering winning proposition, our focus on driving loyalty with the mass, where we have our strength, remains relevant still. SME and agri as areas that we deliberately decided to focus on as far as our diversification agenda is concerned. And I will in the next slides unpack in terms of the progress we have made as far as SME and agri segments are concerned. We also deliberated on the deepening penetration on wholesale, and I have a slide that we will cover in terms of the progress we have made on growing our wholesale balance sheet. Then operational efficiency, branch productivity, enhanced credit. We continue to make some investment on the credit process, and I will cover that in one of the slides where we have digital investment that we continue to make. But again, in terms of the cost efficiency, we have a slide that will cover the progress we have made in terms of improving the efficiency from the CIR perspective, but also in terms of investing in our people. We continue to drive investment in technology and digital just to demonstrate our commitment to innovation and just to ensure that we address customers' needs. But most importantly, we continue with a strategy around data management, data analytics, but we will remain to be one of the innovative bank in the market. In terms of enablers, or rather the areas where we have committed ourselves to share as far as mass market and as mass market and core middle segments are concerned, we are committing to continue to accelerate account opening. And of course, this year we have a target of around opening 1.5 million customers, and currently we are trending well. So far, I think we have opened around 700,000 accounts, which is a good progress we are making through our NMB Pesa account, but also, accelerating account opening through other channels. I think our agency footprint, I've already covered that. If you look at it from 2019, from 8,000 to, we are now talking about 39, almost 40,000 accounts. I think, again, some of you are aware, we covered, this year decided to focus on accelerating financial inclusion, and the areas we have identified. We have our rural banking strategy, where we see there is huge potential in terms of tapping into the opportunity as far as deposits are concerned, but also to provide solution to underserved people in the rural areas. So we have made good progress in terms of penetrating into rural. And I think you will see from the numbers currently, I think if you look at our deposit growth, probably lagging behind our accelerated growth on loans and advances. And I think this is an area that will continue to push more so as we are able to tap into the opportunity as far as deposits are concerned. Diaspora proposition continue to be an area because we understand and appreciate the need of Tanzanians living outside the country as far as financial solutions are concerned. But again, this country, given what we have experienced, the opportunity we see as far as group proposition. So NMB Kikundi, we launched that proposition this year, and we continue to accelerate growth in that space. So in terms of the customer accounts trend, if you look at it, pretty much cumulative average growth of 14%, touching around 7.8 million customer accounts by end of June 2024. So I talked about deepening our penetration in wholesale as part of the winning proposition strategic pillar. And this slide illustrates the performance of wholesale banking segment in terms of the growth that we have recorded. In terms of, if you look at, for example, on deposit side, cumulative average growth of 19%, just from 1.4 trillion in 2019 to 3.3 trillion closing H1 2024. But you will also note that loans and advances have grown from around 500 from 0.5 trillion to around 2.2 trillion, which is a cumulative average of around 33%. So it's a very solid growth that we have recorded. And of course, we continue with initiatives. And I just want to highlight that with the growth that we have recorded on the loans and advances, as you will also realize that we have improved the NPL as well in that portfolio. And as we speak, NPL for the wholesale banking portfolio is at around 5.1 versus 14 that we recorded in 2019. So with the growth, but we continue to maintain good quality. I think is an area where, from the strategy perspective, we have made a great achievement over the last 5 years. And what we are doing now is to ensure that we moderate growth in that specifically on the asset side, so that we maintain the right level of quality, and we will be very selective in terms of the wholesale clients that we bring on on our balance sheet as far as loans and advances are concerned. The same growth has been recorded very solid on the off-balance sheet, touching around 2.2 trillion, which is also a cumulative average growth of 22% in the last 5 years. If you look at it, if you single out wholesale banking balance sheet, really well funded with the LDR of around 52%, which is a good. So this clearly tells that wholesale banking will remain to be a fundamental business to support the funding across the bank, specifically to ensure that we accelerate the growth momentum on the asset side for the retail banking. Now, in terms of the progress we've made on SME and agri segments, also very solid. If you look at it from the last 5 years, you will notice that agri has cumulatively grown by around 62%. A very solid growth, touching around 1 trillion, with a limit marked at around 1.6 trillion. SME segment has also recorded a growth, and of course, from the diversification perspective, these are areas that we will continue to accelerate growth. I think we have also been able to manage NPL on both segments, specifically on the agri side. And now, we are talking about single digit as far as NPL for agri is concerned. So it's a solid growth as, with good quality. So having said that, from the assets quality perspective, the next slide is pretty much illustrating with all the growth that we recorded on the loans and advances. So if you look at it from the overall, year on year, this year we have grown by around 22% on loans and advances. And clearly you'll see that over the 5 years, we have been able to maintain the quality and improve the quality. Specifically, if you look at non-performing loan touching 2.8%, is a solid performance. Portfolio at risk also reducing, touching 7.6 by H1 2024. But again, if you look at cost of risk, has also improved in the last 5 years from 2.4 to just 1.2. We understand that in terms of the absolute numbers, impairment charge has increased year on year by around 24%, but overall, the cost of risk has remained at the lower side of 1.2%. I think what also can give you comfort is in terms of the provision NPL coverage ratio, which is now standing at around 102%. So from the quality perspective, I think relatively very good quality if you compare with the market, but also even when you compare with the regional players, the bank has recorded very good quality of portfolio if with all measures put together. Now, I talked about our investment in technology. Of course, we have done a lot in terms of investing in technology, in the digital space. And this slide just illustrates what we have been doing on technology investment. We have embarked on the implementation of the replacement of the core banking system. The project has started, and we are investing on loan management system, master data, Kononi revamp, which is our flagship. But I think interestingly, you will notice that the volume of transaction on the alternative channel has also increased tremendously. And of course, if you look at agency banking from 2021, if you look at ATM and of course NMB Kononi, I think a very solid improvement in the last 3 years. But overall, you look at the transaction taking place outside the branches, around 96% currently, from 93% in 2019. But again, given what we are doing with the NMB Pesa account opening now, we have around 84% of the retail customers we onboarded this year were onboarded 84% digitally. That's a great improvement. That also reduces congestion in our branches, and we will continue to enhance the platform to enable our customers to be onboarded remotely, not necessarily to come to the branches. Internet banking, we have also made some improvement on our internet banking enhancement that has been made, but we'll continue to improve it to ensure that it addresses the key requirements, key needs, and provide the best solution to our corporate customers going forward. I think this slide is just to illustrate some of the innovation and product solutions that we have recently launched. I talked about NMB Pesa, where customers are able to open account remotely, but just a minimum amount of 1,000 and no monthly charges. NMB Mkononi continue to be our flagship, and we'll continue to enhance this. We are bringing new features with that, new solutions for our customers to continue, using the solution conveniently. Spend to save also has taken good traction, which is allowing individuals to set self-present saving, but also Jiweke, which offers savings for the retirees, and Mshiko Faster, which is our micro lending proposition, and we have seen good traction. We have a slide where we'll illustrate in terms of the growth we have seen on income coming from the micro lending. I've already talked about Kikundi, so these are just a few example of solutions that we have put out there, and we see good traction in terms of adoption by our customers. Now, having covered the strategy and in terms of how we have made progress in terms of tapping into the continue to build strength on mass, driving SME, agri, deepening penetration, wholesale, investment in technology, allow me now to cover the financial performance for the first half of the year. And just in a nutshell, we have recorded, solid growth on loans and advances at around 22% year on year, with loans and advances touching 8.3 now. And of course, if you look at the balance sheet, you will notice that our deposits growing at 7%, which clearly indicates funding gap, and that has resulted into the growth in borrowings, and also that has also reflected in the growth that we have recorded on interest expenses. We understand this challenge, and I think, as I said earlier, our focus on deposit drive remains very relevant and the area of focus, and we have right strategy, we believe, that will drive the level of deposits that we require to sustainably grow the loans and advances going forward. I think if you look at it from the capital position, we have remained very well capitalized at around 21.5%. That is the current regulation. But again, even if you factor in some changes in the regulation, we remain well capitalized at around 19% thereabout, and well above our internal and regulatory capital requirement. We have recorded very solid growth on income at around 19% versus growth in operating expenses of around 15%. That continues to give us positive income jaws. But I think if you look at it from the efficiency perspective, we have also recorded a very good improvement on our efficiency level with a cost-to-income ratio of 37%, which is a great, efficiency level. If you look at this market, I think we become the third after Citibank and Standard, and that is still a very solid efficiency level across the region. Now, the next slide, I think I've talked about most of it in terms of the growth that we have recorded, total asset growing at around 21%. And of course, our borrowings, as I said earlier, just to support the demand for credit and growth that we have recorded on the lending, we grew our borrowings by around 49%. LDR continue to be a challenge at 92.7%. But I think we have, as I said earlier, clear strategies to drive growth of, deposit growth going forward. Now, the next slide is more of just to cover in terms of where we have seen growth as far as loans and advances are concerned. Looking at the portfolio mix, retail continues to be the majority, and of course, wholesale has recorded a very solid growth, I said earlier, mostly coming from the corporate lending, agri wholesale lending, but also some of the government deals that we booked in the period. But overall, if you look at it from the asset side, loans and advances continue to make significant part of our assets, around 63%. Government security making 18%, which combined gives you around 81% earning asset, and the rest are just cash and other assets. So I think we continue to maintain almost the same ratio of government securities versus loans and advances, and that continues to provide a growth momentum in our income. Specifically, if you look at the growth we have recorded on interest income, is a reflection of what you see on the balance sheet side. And I think portfolio mix, if you look at it, most of it still personal lending, specifically salary workers loan. The next slide is mostly on the funding base. The deposit mix continue to remain stable with the customer deposit composition making 84%, and out of that, 85% of our deposit remained CASA, just consistent with the previous year. So that clearly tells that we have a very strong funding base, with 84 coming from customers' deposit, only 13% borrowings, even though we have grown, but still only 13% we rely on the borrowings. So we'll continue to accelerate our growth momentum on the deposit side, and I think the strategies we have in place will definitely yield the best outcome as far as deposits are concerned. Income statement now, if you look at it, we recorded PAT of 314 billion, which is a 20% year-on-year increase. I think with what I've already talked about, our income continued to grow faster than our operating expenses. Impairment still a challenge, and mainly driven by some of the names with the increased risk, and we continue to manage that. We have embarked on the implementation. Of course, it is almost towards the end, towards the last phase, IFRS 9 system, and we will start running parallel numbers from Q3. We hope that if things go well, then we will have adopted the new IFRS system by end of the year. We hope that will also improve in terms of the quality of the, loans and advances management, but specifically in terms of ECL management. Now, if you look at I covered net in terms of the growth of interest income versus growth of interest expenses. We have recorded 19 thereabout growth of interest income versus 40% growth on interest expenses. That clearly squeezes our margin, and definitely is pretty much driven by the increased borrowing that we recorded in the year. And we understand this challenge, and that has squeezed our margins a bit. We are pretty much optimistic that going forward, the focus we have on deposit, specifically to have an ecosystem, pan-bank approach to ring-fence deposits that we receive on the wholesale to retail side. I think that will give us strong mileage in terms of improving. But I think you will also notice that cost of fund has remained relatively stable at around 2.9 H1. I mean H1 2024. From Q1 to Q2, we have recorded a bit of this decrease in cost of fund. This is an embedded, or rather blended cost of fund. Allow me now to cover the NFI. Very solid momentum on NFI at around 29% growth year on year. But I think you will also notice that we have recorded a very solid growth on FX income at around 84% year on year. This is derived from the opportunity as far as increased cross-border transactions, but also the use of alternative currencies apart from US dollar. That gave us a bit of margin there, and we have been able to drive such growth. I think other income lines have also grown steadily. If you look at fees and commission growing at 20%, and of course that has resulted into improved contribution of NFI to total income. If you look at it from 2022, where NFI was contributing only 32.9%, we recorded a contribution of 35.3%. This is pretty much a reflection of the achievement we have so far made on diversifying our income streams. The next slide, I just want to cover on the, of course, cost to income ratio, the efficiency level that we have recorded. And whilst you see the operating expenses growing year on year, but efficiency increases, this is mainly due to the robust growth that we have recorded on income, but prudent cost management that we have also deployed, and investment we have made in technology that resulted into solid growth in NFIs, as a result of improved customer transactions. So from the strategy point of view, I think we have made good progress in terms of execution of our strategy. The areas we wanted to focus on, we have made good progress. The strategy is coming to an end 2025, and definitely we will have to develop another MTP. I think from the numbers perspective, we even had to rebase the numbers as far as MTPs is concerned. But as we speak, 2024 execution, disciplined execution of the strategy has resulted to the numbers that we see. We know the areas where we are challenged, and we are proactively making necessary measures and initiatives to turn things around. And we given the commitment that we have and the opportunities that we see, we are very much optimistic that we should be able to address some of the challenges that we face. And as such, we continue to see positive trajectory as far as 2024 is concerned. So in a nutshell, that's really what I wanted to cover as far as the strategy, execution, but again, in terms of the actual performance that we've recorded for the first half of the year. And allow me now, before we get into the Q&As, for Eno to walk us through our sustainability agenda.
Thank you so much, CFO. So as CFO has already said earlier, we are not only a performance-driven organization, we are a purpose-led organization, putting focus not only on the profitability, but on other considerations, especially driving socio-economic development of Tanzania. Our sustainability strategy is pretty much based along these premises, that we are not only committed to drive sustainable profitability and sustainable growth for this organization, but we are committed also to drive superior and solid value creation to all our stakeholders, including the shareholders. But more importantly, we are very much committed to ensure that we drive what we call sustainable and inclusive socio-economic development through financing here in Tanzania, and with, of course, having consideration on the environment upon which we operate. So in a nutshell, this is the sustainability strategy for this bank. So the progress along the sustainability journey of this bank can be pretty much highlighted through this slide. Not only we have further driven our inroads along the areas of driving financial inclusion, which is one among the key areas of strategic imperative for this bank. We have been able, in this front, to bring a number of Tanzanians into the form of financial services, driving financial inclusion here in Tanzania, hence solidifying as well as accelerating the pace of socio-economic development agenda through banking services. But also, if you look at another area of sustainable operations, we are also committed to ensure that we reduce the impact of our operations into the environment. And in this front, there is a number of things that we are doing, both mitigation as well as adaptation strategies. But more importantly, we are looking at sustainability now from a science-based perspective. And in this regard, we have on the course to finalize computation of our Scope 1 as well as Scope 2 emissions, which will pretty much give us a clarity in terms of pathway and give us a baseline on our commitments toward further reduction of our GHG emissions going forward. But in this front also, we are also computing, baselining the GHG emissions, especially on our financed emissions, so that we can set a clear path for sustainability for this bank, as well as in alignment with the nationally determined contributions of Tanzania. And from a financing perspective, we are very happy that we have made good progress along this area. Sustainable financing has been one among the areas whereby the NMB Bank has been able to position not only this bank outside the premises of this country, but importantly to raise the flag of Tanzania very high at the global scale. You might all remember that we had the Jasiri bond, which we came up with around the year of 2021. We are happy that that bond was noteworthy and recognized globally as the sustainable bond of the year, making it the best bond ever to be issued from an African issuer. But owing to that success, we have further accelerated our passion and commitment towards driving sustainable financing. And you all remember the inaugural sustainable bond, which encompasses both asset classes, meaning the social as well as the environmental, was also very noteworthy, highly oversubscribed, and more importantly, we were able to cross-list it in the London Stock Exchange, hence making Tanzania to be a country that has had a bond to ever be first listed in the London Stock Exchange, hence positioning Tanzania as well as Africa in the global map of sustainability agenda. So our commitment going forward, I'll say it's multi-pronged, meaning that we'll continue to drive our acceleration in the areas of socio-economic development. We'll continue to impact on sustainable development goals. We'll continue to have a keen sense of ensuring environmental stewardship. But more importantly, we'll continue to unlock opportunities as well as growth potential in the area of sustainable financing. And that, in a nutshell, is the sustainability strategy for this bank. And just to put in summarization that as a bank, we are committed going forward to ensure that not only we drive that solid value creation to the shareholders, but more importantly, we are very committed to ensure that we have a keen sense of stakeholders' view and their considerations, as well as their demands, but more importantly, to ensure that collectively we drive the sustainability agenda in line with the global commitments as well as the country level commitments. Thank you so much, Professor. Please allow me to pass on the mic to the CFO.
Okay, thank you very much, Innocent. Maybe before we get into the Q&A, I am joined here with the Acting Chief Credit Officer, Aziz, as I said earlier, who is our treasurer. Before we get into Q&A, and if you have anything that we have not covered, you're good. We're good. You're good. So, Prof, thank you very much. And we are now happy to hear from the colleagues on the call for any questions, any recommendations that you may have for us. Thank you very much.
Thank you very much. I think that was quite a comprehensive presentation, quite impressive on the performance. I think that just to recap the performance, it is fantastic that you have reported 314 billion first half net profits, which is up about 20%. You have been growing on your distribution. You've been growing on your digital proposition. The target of 5 million, I'm quite impressed that you have 5 million customers. You're onboarding about 1 million customers this year, and you have already, in the first half, already done about 700,000. I think this is quite a commendable achievement. As far as investors are concerned, I think your market cap hitting $1 billion, about 2.7 trillion Tanzanian shillings. That is very, 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 very impressive. I think overall the performance is fantastic. I think NMB has been a superb performer as far as the banking system is concerned. 29% market share of all the profits in the industry. The cost to income ratio at 36.9. I think all of those are quite positive. I'll kickstart the questions with some observation here. Your growth has been really impressive. You have an asset growth of 21%, a loan growth of 22%, but a deposit growth of only 7%. And you have basically closed the gap by borrowings 45%. And I think this is really showing a bit of a stress on the liquidity. Yes, you still have some room. I think your overall loan to deposit ratio is 92.7. I think historically, probably NMB has not been a bank that has been in the 90s percent. So I think my comrade and friend Aziz is there in the treasury. I heard his voice. So maybe you can give us some color as to going forward, how these liquidity challenges are going to be dealt with by NMB.
A few more questions, and then how do you want us to do this?
So I think maybe we just go one at a time, because I think instead of bunching them, because questions around the deposit growth rate are also coming from the participants in the chat. So I think this gap between the growth in loans, growth in assets, and growth in deposits is a common question. So maybe we can start off with that.
All right. No, thanks, Prof. I'm looking at my CFO, but yeah, but let's try. So I think you're right, and this is not just for NMB. If you look at it, it's actually an industry issue where we've seen in recent years the loans deposit ratios generally going up. And that's partly the reason why we are looking at alternative ways to fund the increasing demand for loans and advances. So certainly, bonds we've done, borrowings from abroad we've done, and we'll continue to do that. And for me, the short answer to that is, for as long as we see the activities we see in the economy really picking up, there'll be need for external funding to complement domestic funding that we see. But yes, we'll prefer funding that with cheap deposits, and we continue to do that through our rural banking strategy, where we believe over time that should probably help us fill the gap. But I think for now, really, it's ensuring we have sufficient contingency funding lines in place that we can tap as and when we need, because indeed demand for credit is there. We see growth, a lot of activity in the economy, And somehow in the meantime, in the short term, we have to find out ways to complement the demand for credit. But over time, we believe that our focus on rural banking strategy should certainly bring us cheaper deposits in the short to medium term. I'll pause there, Prof.
Yeah, I think that's a challenge. It looks like it's quite a challenge. I don't know how well that those other sources are going to keep this loan to deposit ratio constant, because it seems to be a very tight growth levels. It's loans keep growing. I think deposits will have to grow. Otherwise, I think you're getting mismatches that are increasing your cost of financing. But after noting that, I think we have a few questions in the chat. I think there is a question from Emmanuel Matunda is asking about the interest rate environment in Tanzania and the appetite of banks, large banks like NMB in the MSME lines. I think on the agri side, you've already covered that. The growth has been quite high. So basically, on the interest rate environment in Tanzania, that's a main question of there. And then I think Bhavit also has a question on terms of the progress in terms of the agri lending and the FX side. I think in the FX side, his main question is on the flow of the business. What is happening to FX in terms of transactions themselves? Are they growing? And how that is going to pan out into the future. So a question on FX and a question on MSME and the interest rate environment in Tanzania.
All right, Prof. I'll take two on interest rates and FX. Now, on interest rates, in line with the monetary policy stance, we continue to see low interest rates generally, especially if you're talking about below 1 year. It's single digits definitely, and we've seen that trend being the case for the past, I think, 4 years almost. We foresee that, obviously, in anticipation of elections, demand for, funding to finance election-related activities, one would expect that perhaps a slight tick up of interest rates, and I think that is our expectations, that probably in the course of the next 12 months, we might see some tick up of interest rates on the short term of the yield curve, but at the same time on the long-term end of the yield curve. So I think there are already signals to that, and we hope, and we aligned in terms of the expectation of the balance sheets and pricing generally. So that's how we view it. But overall, talk about general average lending rates. We've seen over the past 3 years, it's been a downward trend. I think now it's averaging just under 16%. So even though yes, there's expectations for potentially an MPC, a policy rate, going up by probably 0.5 or 1%, that should definitely not have a significant impact on the average lending rates. On the FX side, yes, generally liquidity is scarce in that area, especially talk about purchases for purposes of importations. But I think so far it's been helped by sizable flows that we see coming from mining, especially, and recently in a few crops, sesame. We expect significant flows also from the coffee side, cotton and cashew nuts toward the end of the year. So that should definitely help, ease the pressure that we see on the foreign exchange markets. But certainly also we're expecting perhaps for the central bank to also support the market as and when it's needed. So I won't talk much about the parallel market, but yes, that's something that the Bank of Tanzania is trying to crack. So maybe on the MSME, CFO maybe has something to talk about that from a strategy perspective.
Okay, so specifically, Prof, what was the question about MSME?
I think the question was the appetite at NMB for growing that portfolio towards medium and small enterprises. I think you covered a bit of it in terms of your growth, but I think if you can give the flavor, because I think there was an interest to know how much of maybe your portfolio is growing in that particular space of MSME.
As a systemic bank, NMB will definitely have a role to play in the MSME sector. And of course, our book size is small now, but is an area that will continue to play. We understand the challenges MSMEs are facing, specifically on the collaterals and so on, documentation and so on. But I think it's an area that we cannot leave, lagging behind. So we will continue to invest in that segment with precaution. But I think as a systemic bank, we'll continue to support MSME. In terms of the actual numbers, maybe I can quickly check, but it's not very big, compared with the SME, Agri, and the rest.
Thank you very much. I think I will invite Muammar from Africa Alliance Fund. Muammar?
Yep. So congratulations on the fantastic results, and thank you very much for this call. So I just had a few questions. My first one is, what would be your key priorities in your next medium-term strategy? I know that may be a slightly premature question, but it would just be interesting to know how the bank is looking at formulating its strategy over the next 5-year period. That's my first question. My second question is on your MNO collaboration fees. So as part of your non-funded income, there's a line inside there that grew quite well, with reference to your recently released annual report. If you can just maybe unpack how, or what kind of revenue drivers are within that line. I assume it's some kind of collaboration with the local telcos. If you can just maybe unpack what's driving that line. And related to that is on your agency banking. If you can just maybe give us a brief on how you structure the business you do with the agencies. I mean, you've grown your agency network phenomenally from around 9,000 to almost 40,000. It'd just be nice to know how the revenue split is and what the cost of building that agency network is. And then my last question, I guess, is on your trading and commission lending line. It seems to have decreased substantially over the last 1 year. Is that a strategic decision on the part of the bank to reduce its exposure there? Is there less opportunity there? If you could just maybe elaborate on that, I'd really appreciate that. Thank you.
Thank you very much. Let me allow Aziz to start with the last one.
Muammar, was that related to trading as in FX trading, or which line are you referring to?
When you disclose your different loan segments, you have financial institutions, manufacturing, trading, commercial. So it's one of your loan segments.
Okay, so I don't think I have an answer to that now, but
Okay.
we can certainly check and drop you an email, certainly.
Yeah, so I will cover the questions, the 3 and allow my colleagues also to contribute if there is anything that I will not cover. Now, in terms of how it look like in the next 5 years, of course, one is we aspire to remain the market leader in Tanzania, to remain a preferred financial solutions provider. And that will be supported by the investment that we intend to do on technology, to focus on payment solutions in the next 5 years. I think the investment we expect to put on innovation, technology, digital space will drive that. I think as a market leader, we will also aim to be impactful and drive financial inclusion massively in the economy. So I think that will also be informed by the key sectors I've already said we want to play in. And I think the impact is what is very important for us, both to our stakeholders, to the shareholders, to the community we live. I think that is the thinking around it. I know in the next 5 years, probably, if you look at things the way we are trending, maybe our balance sheet will have doubled by then. So I think it will be a very big organization, more than you can imagine. And of course, if you look at where we also want to play, not only in Tanzania, but I think in the next 5 years, we want to be a regional player as far as financial solutions are concerned. Then MNO collaboration, this is purely money, or rather income generated on our NMB Mkononi, which I covered earlier, and is both on the USSD and app, NMB app. And we have been able to revamp the NMB Mkononi, as I said earlier, and it provides more features and very convenient services to our customer. And as such, we have seen adoption. We have seen, more customers using it. So utilization has increased. Number of transactions happening on Mkononi has increased. But we have also been able to scale up in terms of the number of customers that we've been able to onboard in the last 2 years. So if you look at last year, we onboarded around 1.2 million customers. This year, so far, we have onboarded 700,000. All these, will drive transaction on NMB Mkononi. That, clearly drives the income you see growing steadily. Is a flagship, and we will continue to invest more to make it relevant. I think the issues of security, we are doing a lot to invest on the cyber. We know, some of the challenges that specifically, retirees face. We are doing all that we can to make it safest, but also the most convenient channel for our customers. Agency banking model, of course, I will not want to go much into the details in terms of the pricing and all that, but I think last year we did a revamp as well in the agency banking platform to allow our agents to use their personal, phones. So you don't necessarily need the POS. So as long as you have your phone, we can connect you and you become an agent of the bank. And we'll continue to invest and innovate in that space to make it quite a useful channel as well, as far as rural banking is concerned. So we'll continue to scale up and innovate in that space.
Thank you very much. I think I've just got the news that the auction results for today's T-bills were out, and the interest rates for 1-year T-bill has reached 10.5%. So I think we are seeing already an uptick in interest rates. We are also seeing, of course, the liquidity challenges that we mentioned. I think Emmanuel Matunda had a question on the profitability outlook going forward. Taking these trends into consideration, what is NMB's management's thoughts on the industry's profitability going forward, and whether growth is sustainable at the rates we are seeing now?
Yeah, so as you see the rates, so from the government securities, the papers, that clearly tells you that there will continue to be liquidity challenges in the market, and the pressure will be real in terms of the funding, cost of funding, and so on. Definitely, the market margins will be squeezed big time, because you also appreciate that there's quite a pressure for us to reduce interest rates from the lending side. So, given the competition, we have seen players reducing the rates. Some of them have, gone, so far below, lending at around 13, 14% and thereabout. So overall, market profitability will be challenged as the rates go up, especially on the funding side, because from the lending side, we are pretty much pressurized to reduce interest rates big time. So definitely, I think what will be the rescue to the banks may be non-funded income, of which also has pressure. So I think in the medium term, we'll continue to see a bit of growth, but definitely not to the level that one would imagine of 40%, 30%. It will be a very moderate growth as far as profitability is concerned.
Thank you very much. I think there's a very direct question from Natalia Zabrodina. She's asking on the NMB's strategic initiatives to improve deposit growth.
Strategic initiatives to improve. Of course, I think I covered this big time as part of my presentation, and we know that financial inclusion is still on the lower side in the economy, and we know the economy continues to be cash based, very dominant cash, and quite money sitting outside, not in the financial formal system. And for us, that we see as an opportunity. And I think rural area, or rather rural strategy, is one of the key strategic initiatives. We may not be able to realize the benefit immediately, but I think if we are able to penetrate in the medium to long term, we should be able to bring the money lying outside there into the formal sector. So I think that's one of them. But I think from the overall market perspective, definitely we have strategy to do with the wholesale banking as well. I would not want to go much into the detail, but I think our ecosystem approach, I talked about ring fencing the deposits. We know the ecosystem from wholesale, SME to individuals. That is also an area we are going to focus on to ensure that we retain whatever we have, and keep on bringing more. I think one thing that we are very much also committed to is to ensure that we continue to enhance our services and provide the best solutions to our customers to make them stay with us sustainably. So that's really what I can say on high level. But in terms of detailed execution, initiatives, we think we have the right initiatives to turn things around. Thank you.
I think NMB has a lot of credibility in the bank, so we're not worried about the delivery of NMB, and I think all investors are quite happy that their strategies are in place, and we look forward to their success. I think Muammar had a follow-up question. Muammar, Karibu.
Yep, thank you. Actually, I have three follow-ups. So two follow-ups and just one new question. So sorry to repeat this question, but on the NMB Mkononi, are those fees primarily generated from sort of payments that you have with merchants, let's say, or is it NMB customers lending to each other, or are these fees charged on lending products? That's just my first question. My second question is on the agents, the 39,000 agents. Are all of those or some of those, I mean, do you have exclusivity arrangements with them? Are they exclusive agents? It would be nice to know that. And then when you're making your presentation on capital adequacy, you mentioned that it's 21.5% on the presentation, but given recent developments with some rules that's effectively 19%. Could you maybe just elaborate on that comment, please? Thanks.
Okay, thank you very much. So I'll quickly cover Mkononi. So Mkononi is a mobile banking sort of where you have USSD and you have app. Now, it allows customers to transfer money, account to account, customer to business. It also allows other payments, solutions. So it's a solution that provides payment, but also transfer, and that's where we make money. We charge on that. And of course, everybody in the market charge the same, not necessarily the same amount, because it's a competition. Now, agents exclusivity, no. We have agents who are agents of other players in the market, including MNOs and other banks in the market. So there's no exclusivity as we speak. Now, on the capital adequacy ratio, some of you who are aware that the regulator issued capital adequacy ICAP. Now, there is a bit of change in terms of the capital charge for some of the risk-weighted assets. and that will definitely reduce the capital position of the bank. So if you factor in those changes, so for example, I think the SWL capital charge from 50% to 75%, that will consume more capital. And if we factor all those changes, so operational risk capital charge, market risk capital charge, that takes us to around 19%. But what I was saying is that with all those factors put together, the new changes, we have done our stress testing, and we will remain to have a solid capital position above regulatory limit of total capital of 14.5%. So if you're talking about 14.5% and we are at 19%, that is a very solid buffer that we have. Also very much above our internal limit of 17%. So that's what I wanted to say. And I think we will continue to build capital, of course, given the investment that we want to make. Maybe it may not be sufficient, but I think given the profitability that we continue to record, our capital position will definitely improve with time. Thank you.
Thank you very much. I think that's quite comprehensively covered. I think you might have a quick question myself. On the growth levels, you noted that you explained that the wholesale banking grew its loan book by 33%. Overall, the loan book has grown by about 22%. The overall NPL is 2.8. The wholesale NPL is about 5.1. Agri has grown by 62% cumulative annual growth rate of over the last 5 years. What do you think is now the trajectory? I mean, the industry has had a very good run in terms of NPLs coming down, loan quality is improving. Is the cycle going to be turning anytime soon? Because with the interest rates rising that we've been talking about, with the loan growth being so, you're talking about very high loan growth rates, 20% and above 20%. Are we going to be seeing quality deteriorations at NMB and of course at the industry level?
Now, I think the growth we have seen with the credit, it depends on also the clients you take on board. We know the sectors which are pretty much challenged. And I said that from the wholesale perspective, I think we consider very moderate growth. We know the areas where the risk is high. And I think depends on the processes we put in place and so on. But if you look at it, in the next 5 years, given the macroeconomic environment, I think the economy will continue to support the growth that is projected from the economy perspective will still support the growth in various sectors. And even if you look at it from the political environment, we don't foresee necessarily any disruption as far as macroeconomic fundamentals are concerned. So in the next 5 years, definitely the appetite for credit will definitely remain on the higher side. And regardless of the increase in interest rates, now, whether our customers will be challenged with that is something that, is very difficult to confirm, but with certain, given the macroeconomic dynamics and fundamentals, we see the economy to continue to grow. And we expect that NPL will definitely remain probably same levels, will be definitely contained. I don't see us going back to probably the levels of 10% double-digit levels. I think what the journey that the banks have traveled, given the regulatory directives, expectations, benchmarking of NPL and CIR, we have seen banks taking necessary measures, deliberate efforts to reduce those ratios, efficiency and quality levels. I think that discipline has already been embedded in the industry, And if it is supported with the macroeconomic factors, I don't foresee things turning around as such. Aziz, yeah, let's see if you have anything.
Yes, maybe just to add, Prof, certainly, I think the government stance, it's a very pro-private sector, doing well. Just recently we saw that team was formed to look at the tax issues. Some very good signals really to say, the government is really very keen to see the private sector, doing well. And I think if that is if our understanding is right from that perspective, then we don't expect surprises. But of course, there's been a lot of learnings, from these booms and busts. The sector has matured, I'll say, to some extent. There's quite a couple of things that we've picked up, from things that happened in the past that are actually helping us, shape our underwriting processes and ensuring that we don't get some of the surprises, especially those that are, internally driven. But certainly, if there would be external shocks, I think that's something else. But I think we are more, positively positioned to deal with these issues, given the learnings we've gained from historical issues. I want to pause there, Prof. Thanks.
Thank you very much. I think roughly speaking, your NPL ratios not only are low, but your coverage ratio is quite market leading, being over 100%. So I think NMB, even if there are challenges, NMB probably is better placed to ride those challenges compared to other financial institutions, those which are struggling a little bit more in terms of their NPLs and also in terms of their coverage. So that I think is well understood. I'm just looking around to see if there are any more questions. I think I don't see any other questions in the chat. So with that, I think I would like to thank Juma and the whole team at NMB, Aziz, everyone else around the table, Innocent, for organizing and being available for this call and communicating with investors. And I'd like to thank you all. And I have to say the performance has been phenomenal. 314 billion. I think Juma and team, you are embarrassing the rest of the industry. I mean,
so Prof, with your maths and your analysis, what do you expect?
I expect about 1,300 EPS for the year, something like 640 billion annual net profit level. I don't know if I am off plus or minus.
Let's see. Let's see how it goes.
Let's see how it goes. But I think the first half of the year has really set a very positive tone. And I think every investor here is quite happy with the trend, trajectory, and strategy of NMB. Thank you very much.
Thank you very much, Prof. Thanks all investors, all colleagues on the call. Thank you.